Let's pick up the pace and move to our next session, Career Opportunities in Real Estate. To take this session ahead, please join me in welcoming to the stage Mr. Litesh Gada, CFA Director, CFA Society India. A brief about Litesh. Mr. Litesh Gada is the founder of Aureus Assets, which provides services like business consulting, valuations, transaction advisory, and wealth management. He is a qualified chartered accountant, company secretary, and a CFA charter holder. Mr. Gada has over 15 years of experience in leading private equity investments, investment banking, mergers, and acquisitions. In the past, he has worked with organizations like RSM and Company, PwC India, Chess Capital, etc. He was awarded with 40 under 40 alternative investment professionals in India, awarded by the Indian Association of Alternative Investment Funds in January 2018. A fun fact, he has been a long-distance runner since 2009 and has participated and successfully completed many full marathons and half marathons. Welcome on the stage, Litesh.
Yeah, good morning, everyone. Thanks, Nidhi and Deepika, for the kind introduction. So welcome, everyone, for our 6th FTS. And today's topic that we have chosen is pretty interesting and quite different in terms of the topics that we have chosen earlier in our previous conferences. Careers in real estate. As an asset class, it is one of the biggest asset classes. Majority of the people have some or the other exposure towards real estate. But when it comes to investing, very few people have an institutionalized approach towards it. And the expectations are pretty different. That, of course, we'll be covering through our discussion with our experts for the day. To start with, we have on the panel Berinder Sahni, Berry as we call him. He has been with us at the society for a pretty long time. He is principal investments at SBI Ventures Limited. Berinder has over 2 decades of experience in investments and financial services. He has worked on M&A, equity, and debt offerings, totaling more than $2 billion. He has in the past worked with EY, JP Morgan, Colliers. Currently, he is working with SBI Ventures, the Swami Fund, which everybody knows very clearly. It's a $2 billion stressed asset realty fund, and they have got certain more allocation during the budget as well. Berinder is a chartered accountant and a CFA charter holder, and also holds a master's degree in commerce. Please welcome Berinder. Next is Girish Singhi. He is co-CIO at Welspun One. Girish is a seasoned private equity real estate professional with over 15 years of experience in fundraising, investments, asset management, development management, and operations across all asset classes, including residential, commercial, warehousing, data centers, retail, and hospitality. He has led investments and divestments on pan-India basis across greenfield, brownfield, and core assets. Girish holds a bachelor's degree in engineering from Netaji Subhash Institute of Technology, an MBA from Faculty of Management Studies at the University of Delhi. Please welcome Girish. Next is our own Nikhil Shah, CFA. He is Senior Director at Capital Markets and Investment Services, Colliers. Nikhil is a seasoned professional with 18 years of experience across hospitality and banking sectors. He specializes in hotel transactions, working with properties ranging from budget hotels to upscale resorts and service apartments. Nikhil's career began with leading fundraising initiatives for PE-funded hospitality company, followed by pivotal role in hospital development, driving expansion across India. Currently, he serves as Director Capital Markets at Colliers. Nikhil advises clients on hotel investments, raising debt and equity, contract negotiations, and valuations. Please welcome Nikhil. So as I said, today's topic of careers in real estate is quite different from the in general conversations that we have in terms of equity research, equity investments, portfolio management, setting up AIFs, global macros. So in terms of this particular asset class, it has been very rarely discussed at the CFA Society platform. Here, what we are going to discuss is more about the career opportunities in this particular asset class, in this domain. So without taking a lot of time, I will straight away jump to the questions that I had prepared initially. The team can share questions from the audience as well. Beri, to start with you, there are various asset classes like equity, debt, commodities, and real estate. There are opportunities beyond equity and portfolio management, so to say. And you have done everything in terms of investment banking, working on the equity side, and now that you are on the real estate side, managing funds for Swami. So in terms of the larger opportunity and what kind of opportunities are there in terms of careers, if you can throw some light on that.
Sure. Great. Thank you, CFA Institute, for having me over. So I'll talk about a little bit about myself, okay, 2-3 minutes, and then I'll just jump onto the question. So 10 years back now, I used to be on the other side, right? So I used to always say, yaar, ek din na, I want to come on this stage and see how it feels like, you know. So 10 years later, sitting over here in front of my alma mater, CFA Institute, very special for me, right? So it's a journey. And I'm sure, believe me, 100%, I am sure that everyone who's sitting out here, you know, you will be over here at some point in time. You know, just keep dreaming and just keep believing in yourself, and it happens. It's actually just a regular journey of how we all grow through our professional careers. Okay, so coming back in terms of opportunity, again, let me tell you a little bit about my career, why I shifted, and then the kind of opportunities. So I qualified chartered accountant in 2003. I started my post-qualification. I started with JP Morgan. I was doing consumer healthcare retail. I did 4 years of consumer healthcare retail, a bit in India, a bit in the US. At that point in time, way back, India relatively had so consumer requires like a lot of brands, healthcare requires a lot of research, retail was just about opening up, right? So just the number of transactions in investment banking that were happening way back in 2004, 2007 was fairly limited. But having been in investment banking, one is generally opening up the newspapers and checking ki bhai ho kya raha hai industry mein, right? And real estate was the sector at that point in time because FDI had newly opened up in 2005, and there were close to like, at that point in time, maybe like 90 odd private equity shops which had opened up in India, right? Over a period of time, like every, sunrise industry, this industry has gone through a bit of pruning, and we have gone through a lot of maturity. So that was my reason for my shift. There was not, at that point in time, not enough action in consumer healthcare retail, lot more action in real estate. Number of transactions getting announced was a lot more. Of course, things are very different now in 2025. All the industries are really large. The number of transactions happening in each of them are huge. But real estate, just in terms of where we are as a process of evolution as an economy, it continues to be a large part of the economy, right? So let me throw a few stats for you. If India sees, so I do private credit in real estate, okay? So India sees anywhere between, say, $15 to $20 billion in private credit transactions. Now, 30% of that is focused on real estate private credit, okay? And so in fact, I was on IVCA, which was a forum for private equity, and they were just generally discussing the future. And this number of 30% everyone felt that this number will continue to be there, right? So that's on the private credit side. If you start looking at FDI inflows, we see around $4 to $5 billion in real estate inflows, which happened. This has been a very, very consistent number. The only piece which has really changed over a period of time is the mix between residential, commercial, warehousing. So earlier, there was a lot more focus on residential real estate in terms of FDI, but now with warehousing, commercial, a bulk of the FDI has also moved to those sectors. So the opportunity lies in all of these, right? So whether it's going to be residential real estate, which is largely private credit, there is the office space. We are seeing the largest amount of leasing activity across the world in India. So we are setting up new records every year. So pre-COVID, we were at 42 million square feet of leasing activity. That number is now up beyond 50 million square feet, right? So while the entire world has been struggling with leasing of office space and getting people back to office, India that way has really prospered. And hence, so we see REITs coming up, right? So we already have 4 listed REITs. There are a whole bunch of REITs which are actually lined up. I'll leave Girish to talk about the massive work which is happening.
Thanks, Berry. So to continue with the same thing in terms of the opportunities beyond the traditional. So why I'm saying traditional is CFA is considered more towards equity and portfolio management and all, whereas in our curriculum we have learned that there are multiple asset classes: equity, debt, real estate, commodities, derivatives. So with the same line of thought, what Berry mentioned in terms of there are multiple other opportunities in the real estate space. Now, during our conversation earlier, you mentioned that you look everything beyond residential. So again, for a normal layman, it is all about residential as real estate versus as an institution, you consider other aspects of real estate as well. So if you can throw some light on the beyond aspect of the real estate.
Sure. Hi, good afternoon, everyone. It's very happy to be here. It's very encouraging to see about 250 plus attendees here. This is my first CFA event. I am not a CFA. I tried to clear level 1, which I did successfully in 2010, but never had the courage to take any further levels beyond that. So hats off to you guys for clearing multiple levels of CFA. Okay, so I have spent close to 17 years in real estate. So whatever I say, please assume bucket full of salt because I'm heavily biased towards real estate. Back in the days in 2010, right, real estate was not the preferred career option for a lot of people, right? People wanted to go in investment banking. People wanted to go in private equity. But you'll be surprised how much India or real estate sector has grown in the last 15 years. In fact, globally also, let's say, a lot of people have these dream jobs, right? Let's say you choose Blackstone or KKR or Brookfield, etc. You'll be surprised. A large private equity firm like Blackstone has more assets in real estate than in private equity. And so on and so forth. There are multiple, even if you look at Apollo's global assets, they have more assets in real estate than otherwise. Now what I'll do is I'll try to de-jargonize what real estate is, what are different. So we can segment in multiple ways. Let's say in asset classes, there's residential, which you guys understand. There is commercial, there is hospitality, this is a hospitality asset. There is data centers, essentially real estate where you house your data. There is retail, right? There is warehousing. There are hospitals. There are education institutes. There are very niche asset classes like studios. Whatever content you watch on OTT are actually shot on a studio, right? There are other even more niche asset classes like a co-living asset class or a co-working asset class or a flex place or a warehousing where you store. So there are multiple asset classes. So real estate is much more than a pure residential asset class. Then let's understand the type of companies that operate in that zone, right? I'm going very, very basic so that you guys appreciate it. On one hand, you have developers. Developers are basically companies which buy land, get permissions, design, build a product, sell it or lease it. So there are a lot of opportunities in real estate developers, right from investments to planning, to costing, to budgeting, to sales, to marketing. In fact, any field which you have in a typical FMCG company or a typical non-real estate company, that skill can be transferred to a real estate developer as well. The second set is private equity. So Berinder does private credit. There's also private equity. So essentially, you could be raising bunch of capitals from global investors, and you could be allocating them across asset classes. You could be allocating them across development cycle. You could be allocating in land. You could be allocating them in buildings. You could be allocating them in MEPs, and so on and so forth, right? So in the private equity space, you could have roles in investments where you are similar to how you would analyze a stock. You are expected to analyze an investment opportunity. The only difference is the data will not be so simple and not easily available like a public markets. But there are enough and more portals or software which provide the data. Then you could have roles in asset management, which means that once the investments are made, you have to manage them, compare the performance of the assets versus the underwriting, report deviation, create catch-up plans, plan the exits. And then, even in private equity setup, there are also operating businesses, right? For example, you could have an investee development management business where you could have similar roles like a developer. The third set of opportunities in IPCs, which are the international property consultants, likes of JLLs and Colliers or CBRE, where essentially you are advising people like us or people like Berinder to acquire a piece of land, or you're helping them lease an asset. So you would have similar corporate roles, marketing roles, strategy roles, and so on and so forth in IPCs. The fourth set of firms could be investment banking, right? You could have any specific real estate investment banking, wherein you would be helping M&A transactions, helping people acquire land, you could be helping people acquire assets, you could be doing advisory. Fifth opportunity could be even in firms like advisory firms like EY or Deloitte, etc., where you could have roles like valuation, you could have roles on budgeting, etc., etc. Then you could have firms which are very technical in nature, like a quantum, which will be doing specific due diligences, like a technical due diligence or a MEP due diligence. They could have roles there as well. Then you could have roles in banks and NBFCs who would be providing financing to institutions, right? Whether it is construction finance, whether it is LRDs, whether it is mezz financing, whether it's a private credit. So the opportunities and the roles are across. And look, globally, real estate is a very, very evolved asset class. You could also have roles in REITs. As Berinder mentioned, there are 4 listed REITs, which actually acquire ready operating assets and collect rent and manage assets in an institutional fashion, right? You could have roles, similar roles there, like investments, asset management, corporate role, etc. So you would have roles all across. See, the other thing you have to understand is because it's a sunrise industry, your growth will be exponential. Now, if you compare my growth or Berinder's growth, what we could have achieved in 10, 15 years, we would have never been able to achieve in a traditional industry like an FMCG or a financial, because where the roles are defined. It's still growing. So if you get a role and actually you'll have exponential growth, your learning will be exponential, and plus, roles can be transferred. For example, if you are selling a flat, you can of course sell a soap. If you are doing investments for stocks, with some training, you can also do investments for real estate. So it's not like some rocket science which you need to spend a lot of time. So I would heavily encourage you guys to use this opportunity to engage people. And there are a lot of opportunities in real estate across asset classes, across geographies. Of course, real estate is across, in fact, even in family offices. All the family offices which I know I interact with on a daily basis, they also have a large portion of their capital locked in real estate. So if you understand unlocking piece, if you understand real estate is very intuitive, right? How would you analyze the real estate? You would see the infrastructure, you would see the pricing, you would see the growth, essentially all what you learn in CFA as well. So those skills are actually ready-made, tailor-made to be applied to real estate.
Thanks, Girish. So, uh, Nikhil, you are the hospitality expert among us. You understand the sector like none of us understand hospitality. So I just returned from Mahakum yesterday, and I saw tremendous potential in uh, the travel and tourism, and especially for a state like UP, which was once considered as a Bimaru state. And today, when we are expecting an inflow of close to 450 million people in just 45 days. So, with that kind of footfall and that kind of demand, uh, what is your take in terms of the overall hospitality? How does it change from the overall top-down macro view for India versus the micro view for a particular state or a city? And when you are evaluating those things, what thought process goes in while the overall getting into nitty-gritties and the decision making?
Thank you, CFA Society, for having me here. I and Litesh are friends, and we are old-time volunteers. So before taking this question, I would tell you a little bit about my career trajectory. I was with banking for 5 years. I was with ICICI Bank. While I was with ICICI Bank, I did CFA. I was fortunate enough to get 2 weeks leave to do CFA. I found my wife also in ICICI Bank. I was fortunate enough, but I wanted to do something which is more challenging. So I wanted where, I could raise funds, and that's how I ventured into hospitality. So the point I'm trying to make here is, Berry gave you a good advice in terms of macro statistics. Girish told you about various roles. So if you want to change the sector, initial 1 year, 3 years, 5 years, it's not hard. So I changed my career when I was probably 5 years experience in the industry. I'm 40 plus now. I won't tell you my exact age, but I came on the sales side. I'm heading so in IPC, capital market business is the M&A business. So I head the hospitality division for Colliers in India. I understand hotels to a very good extent. To answer Litesh's question is, see, way back when I joined hospitality, it was more to do with business hotels and much to do with city centers and like that. I think after COVID, when the revenge travel happened and people thought that, it's a time-based thing, it did not. People have started taking frequent vacation. Experiential travels is where, people attract the most. So if I'm advising my client or somebody to do any sort of a hotel or a resort, what macro factors I would look at it is how much first it's sustainable, second the product which he's doing, how much experiential it is. If it's 2 hours, 3 hours away from an airport or from say a metro location, it would drive well. Litesh is seeing a phenomenal growth of people coming to these places. One of the good part is because of the 10 cities, 10 places, you can have a lot of accommodation. The issue with India is there are a lot of places like our Prime Minister said Lakshadweep is good. The issue with Lakshadweep is in terms of flight, there is a limited connectivity. In terms of accommodation, there is limited. But if this go up, you can do well. And like, everybody said, real estate is a very big part. I drive very small space, which is called hospitality. If you want to venture into this sector, what happens is, obviously, you would need mentors like us to understand what is the sector. But then what I would advise is you have to do a basics set of a research before coming to us. If you need a job or something, what happens in the role, what are the basic. Nobody wants you to know the technical aspect, but the theoretical one, at least the basic one, that is what, we expect you to be prepared. You have to be good in terms of probably PowerPoint presentation and Excel. That are my 2 bits to it.
Thanks, Nikhil. And when you talk about your career journeys, if I can add my share in terms of how I started. So I cleared my CA in 2007. I was very fascinated about investing, always wanted to become a fund manager someday. Initially joined PwC with their M&A tax team, worked there for a couple of years. Then I joined private equity, spent close to a decade, became a fund manager one day. And then ILFS happened. And good or bad part about this industry is when you are at the top and if something goes wrong, you are the one who is under fire. So after experiencing that, and second aspect is everybody sees the good part about investment management is that managing funds. Nobody talks about the funds from where they are coming. And that is where the biggest challenge lies. So from there, I moved out of the employment thing, started on my own in 2019. COVID happened, kind of was steady state. And because of my overall transferable skills, analyzing financials, analyzing sectors, we were raising funds for real estate companies. And this opportunity came to develop a residential project. And now, after moving all over, I'm now sitting where I have become a full-time operator, developer, developing one project and then taking up, looking at other projects. So basically, you never know from where you will start and where you will be right now and where you will end. So be open to opportunities, be flexible, and of course, you will be one step higher than where you were initially. Now, my journey of moving into this particular sector was because of RERA. There is now a lot of transparency in this particular sector. I personally believe that RERA is the SEBI moment. After the Harshad Mehta scam, people had lost faith in equities, but then SEBI was kind of brought in, and now we see gradually year after year, the number of investors are increasing, the volume has increased, and the kind of wealth that has created. So my question to the panel, to start with, maybe Berry again, is, with RERA in place now, what kind of opportunities do you see? And in terms of the overall visibility that now the money that you have put in, are you going to expect that money to come back? Because earlier also, pre-RERA, as you mentioned, 2005, 2009, people were investing. But a lot of people burned their hands. Now, what is the change and why is this sector now looking much more positive?
Oh, absolutely. So RERA was 2017. It was absolutely a game changer within real estate. It ensured that developers were doing full transparency. Everyone had to upload every kind of approved plan, what kind of sales they have actually done, a broad thesis in terms of the approvals that they have online. And hence the consumer was a lot more aware of what they were actually buying into. This also has attracted a lot of domestic and international investors to the sector, because now they feel that if things are transparent, we can invest more easily, get our money out more easily. And RERA has also evolved over a period of last 8 years. So because we deal in stressed assets, we interact a lot with the RERA chiefs across the states. The adoption of RERA is, so while there's a national RERA and there is a state-wise RERA, the adoption is happening at different paces in different styles by each of these governments. Maharashtra, that way, leads in terms of the transformation and adoption of newer thought processes around RERA. So yes, it's been very helpful. What we've also managed to do, Litesh, is a lot of times when we are trying to resolve stress, we actually need the help of RERA to relax a few things, help us in terms of reviving RERA registrations. And the RERA chiefs across the states have been very forthcoming for us in saying, okay, let's huddle down, let's find solutions for problems that are happening at the ground level. And similarly, while RERA is doing their job, we've also had a chance to interact with a lot of approval authorities. So, for instance, Noida Authority, for the longest time, there were a lot of projects which are actually getting stalled in Noida, but because we were part of a government fund, we got a chance to interact with the authorities, help them rejig regulations, find solutions on a project-by-project basis. And it's extremely interesting to see the kind of talent which is coming through on the government side as well, and the bureaucracy side as well. Really go-getters, really people who are looking at finding solutions. And it's been just a lot of fun interacting with the authorities.
Thanks, Barry. Now, just an add-on to that, Girish, this is an over-regulated sector. There are a lot of regulations. You need an approval for almost each and everything. Now, with that kind of regulated thing, how important is the government's role, clarity of policies, and the team's understanding of the overall regulation so that you don't get stuck anywhere while you are executing the project?
Look, I am always in favor of over-regulation and under-regulation, because over-regulation actually leads to consolidation. It leads to corporate, larger, more transparent players actually doing well. But having said that, India is actually quite over-regulated, right? Now, for example, to start a residential project, do you guys know how many approvals we need to start a residential project? Anybody, any guesses? Single digits, double digits? How, 50? Okay, any other guesses? So depending on which state you are in, like Bombay also has multiple jurisdictions, it's not like one city, right? So you would have anywhere between, if I include the NOCs, right? NOCs and buildings and the state and the central approvals, your approvals could range anywhere between 35 to 50. Okay, that's point number one. Point number two, while RERA, like Berinder was mentioning, will define a particular timeline in which you have to construct, deliver, etc. But the onus is entirely on you. For example, if a particular authority doesn't give you an approval for 24 months, you cannot do anything. Right? There's no single window clearance, there is no deemed approval. You'll still have to keep chasing different departments, different approvals. And the beauty is that these departments don't talk to each other. For example, a department may tell you something, where some other department will tell you something else, completely different. So that's on the approval side. But of course, some states, some cities are actually at the forefront of getting single window clearances or deemed approval. But approval is still a big challenge, especially in a greenfield development. Having said that, regulation and approvals are important. And okay, let me just take a step back. Now, real estate also have two types, right? One is B2C, one is B2B. Now, B2C is when you are actually selling apartments to retail people, right? Retail investors, retail end users. And there you are actually required to protect the interest of individuals like you and me, which is why over-regulation and RERA generally is a thought process where we have come from. Now, on the other side, the entire B2B, which means that where you are building spaces for lease, like a commercial development or a data center or a warehousing, there also, regulation slightly on the tougher side. For example, India is the only sector, which is the only country which has two sets of regulation for REITs and InvITs. Globally, there's only one regulation. You guys understand what the REITs and InvITs, right? Essentially, you buy units and somebody manages those properties institutionally for us, right? There are 4 listed REITs in India. Now, I do think that is so while on the residential development side or any greenfield development side, the regulation is still good in a way because it's meant to protect our rights. But on the other side, where you are regulating an instrument like today, for example, globally, REITs, InvITs markets are over multiple $1 trillion. Okay. In India, the market cap of 4 listed REITs are sub $20 billion. And I'm not sure how many of you are actually investors in REITs, right? Because India is still evolving where people are investing in mutual funds and direct equities. Of course, the flavor may be down because of the recent correction. But it's like that in 1990s you had, or 2000, you had the mutual fund Sahi Hai moment, right? I think that moment or that inflection point is for REITs and InvITs. You already have 4 listed REITs. Some are in the pipeline. You have 1 listed InvIT. Some are in the pipeline. And of course, the third vehicle is an AIF, where if you have a ticket size of 1 crore, you could invest in real estate through dematerialization of shares. Now, those reforms are actually coming a long way. And as on and the maturity evolves and the regulation and the financial understanding of people improve, because unless the liquidity of the market, now look, what is the difference between a public markets or a PMS versus or a InvIT is the liquidity, right? You need liquidity. If you buy physical real estate, you don't know how and when to exit. All these instruments like a REIT or an InvIT or even an AIF to some extent are helping you provide liquidity, providing you access, providing you governance, providing you an institutional manager, which is where I think the regulations are changing and are slightly getting easier. And I hope that the InvITs and the REITs regulation are further relaxed so that more and more retail people can participate and benefit from India's real estate growth story through this. But of course, on the residential side, it's been a pain point. Because look, real estate is a state subject. It's not a national subject. So even the central government beyond a point cannot do much unless the states actually come together. So hopefully there also the intent is there. And look, even there are a lot of other things, right? There are a lot of natural boundaries, there are sanctuaries beyond which you don't get approval. So it's very, very complicated in terms of greenfield development. But of course, when the assets are ready, it's far, far easier. But over-regulation on the greenfield side is good. Maybe under-regulation when assets are ready is slightly better placed.
Thanks, Girish. Nikhil, you know that majority of our audience is either candidates or newly minted members. You yourself are a charter holder. We have gone through all the 3 levels, and one particular topic has been constant for all the levels is ethics. And at that time, we used to feel, why are they constantly focusing on ethics? Why so much importance to ethics? Now that given the kind of sector that we are in, what is your take on the role of ethics and how does it overall help us?
So, look, ethics is very important. While back in the days when you were studying or I was studying, we used to think that why is it so important, especially in a real estate sector where, earlier it was kind of messy, and now because of the RERA and everything, you need professionals. So people like Litesh are a developer because of, having a good, high reputation. So ethics is very important. As you build your reputation in a real estate, then only you can go up. I would just add to Girish's point that what happens in a typical mutual fund or a investment industry, until unless you go way up, making money would be little difficult. You get salaries, you probably have a job, it would be high work hours. But in real estate, even at mid-level, you can earn money, but then it's a high risk, high return kind of a scenario. But ethics plays a very important role. You need to have a very good, high reputation.
Last 2 set of questions. One is in terms of, each one of you can answer that in terms of skill sets required, specific skill sets. Each one of you can give 2 skill sets that are required to kind of first enter into this particular domain and then grow. Maybe Nikhil, you can start with that.
So, see, in terms of CFA, the basic level of theoretical guidance is there. You won't have any sort of practical knowledge, which is for sure. So if you understand PowerPoint presentation in Excel, it would be good enough for you to get insight. But having said that, it has a high barrier. Getting into real estate is not so easy. So before moving to where probably Berry is or Girish is, probably you may have to work in a company like mine, Colliers, maybe in a valuation or feasibility department. You work there a couple of years, probably you move to my kind of setup, which is a merger and acquisition. After doing a merger and acquisition for a couple of years, then it becomes easy to move to either Girish or Berry's side or Litesh's side.
So look, there are 2 aspects, right? One is the sell side and the buy side, right? If you are on the buy side, I think you already have good financial analysis or financial acumen because you're CFA members. But I think you need to also get an understanding of real estate because you should understand what actually is, because it's not, you have to understand per square feet numbers. You need to understand, like, if you're doing data centers, you'll have to think of per megawatt. So understanding the sector is important, and that experience or the skill can be acquired either working in a company or even by working in sessions like working with partners like RICS, or there are a lot of firms which do bespoke programs. Because look, ultimately, you must know what you're analyzing. If you're analyzing a piece of land, or if you're analyzing a piece of credit, or if you're analyzing a piece of cash flow, you must understand the basis behind that, right? How will the developer sell? How will he collect? You must understand accounting. I think accounting is very, very important because real estate accounting is different. It is project completion method versus so you may sell everything, but your revenue is still zero. So I would say accounting and basic real estate knowledge is critical to have a good future in this sector.
So just adding on, I would think because we do a lot of asset management, if you are a construction engineer, if you are an architect who, after having done engineering, has decided to move on to the finance side, I think it's an interesting and quite a lethal combination to have in the real estate sector. So me as a finance guy, I am trying to learn things about design, construction, project management the other way. For the guys who are coming from the other side, I think it's also a very interesting thing because they already have deep understanding of design, project management, and they acquire the financial skills. So I think it's quite helpful in asset management. The other piece is it's a very fragmented industry, right? There are very few pan-India kind of players, of pan-India kind of developers. Hence, your ability to network, reach across is extremely important because then you have like a network across the East-West geographies.
Thanks everyone. And taking from the initial presentation and conversation with Aaron, there are a couple of points that he had mentioned, specifically 3 points, which I felt were worth noting, and maybe you can kind of correlate with this particular asset class. He mentioned that we are now getting into certain volatile times because of the geopolitical changes that have happened, Trump there in US, China maybe not doing so great, Europe completely out of the whack. So volatility is something that we are going to see. Second is the money is easily moving in and out, and that's why kind of in a way posing a lot of challenges. And the last is in terms of deglobalization, where now every government, at the center head is now focusing only on their geography, their country. So with these 3 things, how good or bad it is for this particular asset class to perform within the Indian context? Maybe Girish, you want to start with volatility, long-term money, and deglobalization. One each.
So I think to some extent, all of these impact global inflows in terms of FDI. But if you look at very micro factors which impact the industry in which we operate, they're fairly resilient. For example, we have got used to ordering stuff online, and we want stuff in 5 minutes, 10 minutes, which is where the demand for in-city warehouses or last-mile warehouses or what we call it, urban distribution centers. We are used to watching so much content. We are acquiring so much data, and you have so much usage of AI and the compute. So you would need data centers, right? Similarly, the growth of GCCs in India is huge. In fact, there was a stat I read someday. We have almost doubled the GCC count in the last 2 years, right? And given the need for flexible office spaces, of course, doing well. Post-COVID, we have realized we all need houses. We all need bigger houses. We are all buying houses, right? So I don't think, apart from capital flows, which may or may get impacted, the real estate sector is not impacted. And secondly, the power of domestic money is so huge now in terms of family offices or domestic institutions or domestic family offices or even banks are so huge now that irrespective of whether offshore money comes or does not come in Indian real estate will continue to flourish for the next many, many decades.
Nikhil?
Yeah, so I would add to Girish's point. So volatility is limited in real estate sector because, if there are negative news, you may pull out the money from the public market, the mid-cap and small-cap would fall, but your home prices would not change overnight. Two important things is, when you buy a residential home, probably you're not looking at return, but when you're buying a commercial asset or something, there are two types of yields. One is a cash yield which you get, and one is a capital appreciation, so you have to look at that. Real estate is a little difficult to analyze because the data is not available. The geography, as you move across different geography, you have to understand what are the risk factors. Being in hospitality, fortunate enough to cover India from north to south and west to east. Any sort of an impact in terms of real estate would take a lot of time. Until unless the consumption is affected, then only it will. And like the state is now, I don't see a lot of people buying a real estate for a secondary investment. In Bombay, to by and large, it's for end consumption. So I don't see an impact immediately, at least for 3 to 5 years.
Berry?
Okay, so it says time up, but I will make it very quickly. 3 points. One, we used to see longer cycles in real estate, just like we used to see longer cycles in the economy. The cycles are getting shorter, right? So we could earlier think कि हाँ अभी 10 साल का शुरू हुआ है तो 10 साल चलते ही रहेगा. But now I think the cycles are shorter. So we could see 3 to 4, 5 year kind of cycles. That's one. We are an interest rate sensitive market. When the EMI increases, it hits the common man, and hence the demand gets completely shifted. Even lease rent discounting rates, LAP rates can really impact how much return an investor could make. The third point is, when I'm extensively been interacting with international investors, the rupee volatility doesn't help the international investor. Hence, if you have to, in your financial models, have to continue building a 2 to 3% rupee depreciation, that doesn't help an international investor too much, and because their IRRs get quite hit. So these are 3 points.
Thanks, Nikhil, Girish, and Berry for this wonderful conversation. Thank you for patiently listening to us. A lot of questions are still there, but we are completely out of the time. Maybe some other time, some other place. Thank you.
No, this place, we are around for some time.
You can chat with us.
They are around for conversation. You can pick their mind and understand what goes into their day-to-day routine. Thank you.
Thank you so much, Berinder, Girish, Nikhil, and Litesh, for sharing such wonderful insights with us today. Before we let you go, I want to call on stage Mr. Sachin Nayak to hand over a small token of appreciation from our side.